Trump's tariffs hurt the U.S. more than China. Imagine a strategy designed to strengthen your own economy but ends up causing more harm than good. This is the story of the U.S.-China trade war initiated by President Donald Trump. In an effort to address trade imbalances and revive American manufacturing, the Trump administration imposed tariffs on Chinese imports. The expectation was clear: pressure China to change its trade practices. Recent analyses reveal that these tariffs led to increased costs for American consumers and businesses. According to the Organization for Economic Cooperation and Development, OECD, the U.S. experienced a slowdown in economic growth, with projections dropping to 2.2% in 2025. Meanwhile, China implemented measures to mitigate the impact, including shifting trade to other partners and stimulating domestic consumption. These actions helped cushion their economy against the full brunt of the tariffs. In this video, we'll delve into the effects of the tariffs on U.S. consumers and businesses, explore China's strategies to navigate the trade war. What were Trump's tariffs? In simple terms, a tariff is a tax imposed by a government on goods imported from other countries. During his presidency, Donald Trump introduced a series of tariffs targeting a wide range of imported goods. The tariffs were extensive and affected numerous sectors: steel and aluminum. In March 2025, the U.S. imposed a 25% tariff on all steel and aluminum imports, eliminating previous exemptions and raising the aluminum tariff from 10% to 25%. This move aimed to bolster domestic production and address concerns about overcapacity and unfair subsidies in global markets. Consumer goods. A 120% tariff was imposed on various consumer products, including electronics, clothing, and toys. This significant increase led to price hikes for many everyday items, impacting both retailers and consumers. Automobiles and auto parts. Imported automobiles faced a 25% tariff, with additional tariffs on auto parts expected to follow. The goal was to encourage domestic manufacturing and reduce reliance on foreign-made vehicles. While the intention was to protect American industries and jobs, the broad application of these tariffs led to increased costs for businesses and consumers alike. In the following sections, we'll delve into how these tariffs affected the U.S. economy and how China responded to these measures. How the tariffs hurt the U.S. Imagine walking into your local store and noticing that everyday items like washing machines, electronics, and clothing have become more expensive. This isn't just inflation, it's the direct impact of tariffs. In 2025, the U.S. government imposed a 145% tariff on Chinese imports, leading to a significant increase in consumer prices. Even after consumers adjust their spending habits, the price increase remains at 1.6%, or a $2,600 loss per household. The agricultural sector has been hit particularly hard. China, in retaliation, imposed sweeping 34% tariffs on all U.S. imports, effectively blocking U.S. agricultural exports, with soybean trade being the hardest hit. This move has allowed countries like Brazil to increase their market share in China. The uncertainty caused by these tariffs has led businesses to delay investments and hiring. Economists warn that if consumer pessimism results in reduced spending, the economy could deteriorate further. Despite currently low unemployment and a recent dip in inflation, businesses are delaying hiring and investment due to trade-related volatility. How China minimized the damage. While the United States faced economic challenges due to the tariffs, China implemented a series of strategic measures to mitigate the impact and maintain economic stability. 1. Diversifying trade partners. China proactively sought alternative markets to reduce its reliance on U.S. imports. For instance, in response to U.S. tariffs on Chinese goods, China increased its soybean imports from Brazil. In the first quarter of 2025, Brazil's market share of China's soybean imports rose to 26%, while the U.S. share declined to 68%. This shift not only ensured a steady supply of essential commodities, but also strengthened China's trade relationships with other nations. 2. Currency management. To offset the effects of tariffs, China allowed its currency, the yuan, to depreciate slightly. In April 2025, the People's Bank of China set the yuan's midpoint rate at 7.2066 per dollar, the lowest since September 2023. A weaker yuan makes Chinese exports more competitive globally, helping to cushion the economy against the adverse effects of tariffs. 3. Domestic economic support. Recognizing the potential strain on domestic industries, the Chinese government provided substantial support through subsidies, tax incentives, and low-interest loans. These measures aim to bolster sectors most affected by the trade tensions, ensuring continued production and employment. 4. Shifting global supply chains. Anticipating prolonged trade disputes, many Chinese manufacturers began relocating their operations to countries like Vietnam and Mexico. This strategic move allowed them to continue accessing international markets while avoiding the brunt of U.S. tariffs. Vietnam, in particular, saw a significant influx of manufacturing investments, benefiting from its favorable trade agreements and growing industrial base. As we reflect on the recent trade policies, it's evident that the tariffs imposed by the United States had far-reaching consequences. American consumers faced higher prices on everyday items, with estimates indicating an average annual cost increase of $1,243 per household in 2025 due to these tariffs. The agricultural sector was particularly affected. In response to U.S. tariffs, China imposed retaliatory measures, leading to significant losses for American farmers. Meanwhile, China implemented strategies to cushion its economy. By diversifying trade partnerships, managing currency values, and supporting domestic industries, China maintained a steady economic growth rate of 5.4% in the first quarter of 2025. What are your thoughts on the recent trade policies and their impacts? Share your opinions in the comments below. If you found this analysis insightful, please like the video and subscribe to our channel for more in-depth discussions on global economic developments.